The fastest way to learn how to buy a business is to stand on the shoulders of giants, to learn from people who've done it already. On this video, you're going to see exactly how professional business buyers buy businesses. First guest of the day, Dee, has arrived. I can hear the door go. How are you? You're dead on time. Yeah, that's really good timing. Good to see you. You're waiting outside for that exact moment to ring the doorbell.
I was getting it set up.
So I'll do all the intros and everything later, so we'll just have a chat, really.
Sounds good.
Okay, so you are moving from doing smaller deals, and I think you started off by making it up as you went along, trial and error, just doing it, which is admirable, because a lot of people talk about it but don't actually do it, to bigger deals. So let's start at the beginning. What was the interest in buying a business to start off with?
So initially, when I was younger, whether it was property or whether it was just in general entrepreneurship, if I found an opportunity where there was some arbitrage there, I would take it. So that's where it started, probably early 20s. Very smaller stuff, but I didn't really know what I was doing. I didn't understand there was a world of sort of M&A back then and buying businesses. So I would have done things a lot differently. And then I started to read about it, and I was like, this is pretty cool. I think it was in regards to scaling. I think scaling through acquisition is powerful. And look at the wealthiest people in the world. They're all in business, and most of them are in acquisition, right? So that's when I started to dive in and learn a lot more about it, read some books, watch some YouTube videos, some of yours. And I think from there, I understood there's a process that needs to be done to do it the correct way.
And the process actually is the shortcut. Everyone wants a shortcut. The shortcut is actually have a process. Yeah. Because otherwise, it's a very sort of bendy road where you're trying to get to where you want to go, but you're going off track all the time. Yeah. Where if you've got a process, it keeps you focused, doesn't it?
Oh, definitely. It's 100% needed. Without that, I would have continued to make mistakes, and I still did. You're always going to make. You learn as you go, and I think you learn a lot more post acquisition as well, because that's the hardest part, in my opinion.
Well, that's absolutely right. I think yes. I mean, doing the deal is the easier part. The integration of two businesses or multiple businesses into one is really difficult, and just taking over a business and being the new owner and all the cultural issues, the people issues that go with that.
Yeah, I think as well, when I was initially looking for opportunities, it was more of a case of like, I wanted to see the potential in the business. I wanted stuff that was quite stagnant. So I like to say like hunters and farmers. I like to find people that are farming their business, so just maintaining it. There's not a lot of growth there, but they're not in decline either. Or if they're in decline, is mainly because they start to get fed up. So that's where the motivation to sell comes. Because every business does need hunters and farmers. You need people that are farming because they're fulfilling on the hunter's promise. So the hunter's out getting the client. And I think just adding that into the business in good time helps scaling. I think you can add a lot of value to the business by, having hunters who go out and get the clients. But then a lot of people forget that you do need the farmers to fulfill on the hunter's promise. Otherwise, overpromise and under-deliver, a terrible business trait. So that's what I was initially looking for. I was initially was in construction, and I didn't understand the retention side of construction with the debtors to start with. So there's a lot of stuff that was costing us money to go back and do. Okay. And I couldn't understand at the start, so I learned very quickly on that side.
So you were new to the sector?
With construction, I've been in property and done the whole refurb.
All right, so you started off as a property investor?
Yeah, started off I've been in business. I've had tons of different things. I had loads of startups that have failed as well. Some that have done pretty good that I sold. So my business acumen came from making loads of mistakes in my early 20s. Just trying to do different things in business. And I think experience is the best way to learn, but you can fast track it by having help, and that help stops you from making as many mistakes. And then a few opportunities came up where a friend of mine was in the plumbing and gas sector. He had a fairly large contract, did not understand how to run a business or how to scale, how to employ staff with regards on managing them as well. So that was my first where I seen the opportunity. I was like, look, this is the sector I'm going to target. So I went quite aggressive with it. We bought quite a few, but more to the point, I was looking for engineers that are willing to travel, which is hard to find people who are willing to go away from their family 5 days a week. But I was looking for businesses that already had these people that had national contracts, and we were just taking the contract, consolidating into one company, and then using them. It's a lot harder than I thought it was going to be, and you end up losing contracts. This, as you know, post acquisition, regardless of the transition, some of those relationships have been built in for years and years with the previous ownership. So that was hard. I flew back from Dubai twice to negotiate, renegotiate contracts. Our payment terms were all over the place. I was actually told that this is just how it is in this industry. And I was like, it doesn't make sense that we're doing work. We got to pay our staff.
Why can't we get paid for it on time? Yeah,
but we don't get paid for a while. So we did renegotiate that. We brought it down massively, which helped. And then recently gone through a management buyout on that company there, which it was more than one, but we consolidated it. Some of them didn't work too well. So I'm actually getting paid myself in deferred payments now. But I've done this before with businesses previously, before I understood it. And yeah, we've just moved on to other things now. I've sort of built out our the sort of senior management team for us.
Buying a business is just so rewarding, and I put together a free training showing you exactly how I do it. If you look in the video description below this video, there is a link. You click the link, you're taken through to the training, watch the training, and I'll show you exactly how to buy a business successfully.
What most new buyers worry about is being in a situation where they can't, they're shown up to be a newbie.
Yeah.
And they don't want to be in that very vulnerable position. But what everyone forgets is that the seller is a newbie and has never sold a business before. So as long as you know more about the process than they do, you're going to be okay.
Yeah. So one of the things I think you should always be the buyer, and it sounds very straightforward and common sense, but you need to be able to control the conversation. And like you said, most sellers are looking for you to coach them through the process because they've never done it either. So an analogy I like to use is when you go to buy a car, a buyer can turn into a seller quite quickly. So you go to buy a car, and the first thing people would normally do is try and sell them all the reasons why they should sell the car cheaper to you. So then you're pushing the power into the seller's position, because you're like, it needs new tires, it's got a dent there, so you should sell me the car for cheaper. So you're pushing the control out of your hands. Where if you approach it differently and you're like, look, it is the car I'm looking for. I think it's fairly priced. It's got a few niggles around the car, does need some new tires, but it is what I'm looking for. I've got a few others to see today. I'll save your number and call you later. And straight away, the seller's going to turn into the seller, and they're going to try and sell you the reason to keep you there. It's the same thing when you're talking to a business owner. If you try and sell them all the reasons, of course you want to point out the imperfections of the company in a subtle way so they understand that we're aware of them. But I usually roll past them and I'll come back to them, because you need to maintain that buyer position where they know that you're in control without being arrogant, and I think that's helped me a lot. Speaking to sellers and really trying to help them find the solution while remaining humble at the same time.
Yeah, I think that's such a good attitude, and you can feel in the conversation where it turns, where they are selling you on you buying it from them.
Oh yeah,
and it's always when you pull back slightly. Well, like you said, I'm going to go look at some other cars first. Yeah. You just pull back slightly. And that's when they start giving you all the reasons why it's such a great deal for you and how they can make the deal better for you.
Oh, you want them to sell you it. And that's what you're waiting for. The second they do that, I think not being too eager as well, just, making them aware that there's other people out there that I'm speaking to. And exactly. I think it's important not to get emotionally attached to a deal. There is always another one. And no matter how much work you spend on one, I know it sounds cliche when they say some of the best deals are the ones you walk away from, but it's true. I've done bad deals because I would class myself as a driver. So I'm just like, if it's 80% of the way there, I'm getting it done. And that's what was important now, where the people that I've brought involved, one of them is super conservative. So he's more of like, let's pull back a little bit. He's more analytical. So that works well. But yeah, never be scared to walk away from a deal. I wish I walked away from a deal.
So a lot of people watching and listening to this have been sitting on the fence for a while. And do they take the first step? What should they do first? What do you say to those people?
I would say just take action. I know it sounds very straightforward. The secret formula is take action. You're going to learn as you go along. You're going to, just through experience, there's going to be things that is hard to teach until you do it. Yeah. So you have all the lay all the sort of the basics out and learn as much as you can. And I know you have tons of stuff on this. But you need to take action. You can be the smartest person down the pub and you know everything about buying a business, but if you don't actually get on with it, you're never going to do it. It's hard to say. Once you've done it, it's the best thing you would have ever have done, and it opens up all sorts of doors in life for you once you sort of get on board with it.
Just taking that first step.
Yeah.
Thank you very much for coming down.
That was really good.
Yeah, cool. That was good.
Thank you. That took some interesting turns.
Yeah.
I was kind of wrapping it up towards the end, and then I realised actually no, there's another 5 minutes of conversation. No, that's really good. Very interesting. And you can always tell. Well, I can always tell when I'm talking to someone that they're talking from experience.
Oh yeah.
You can see through it when someone is just sort of sort of feeling around the edges. I can tell that you've done it. It's got that hallmark of experience all over it. So yeah, really good. Thank you.
You learn a lot from it, right?
Yeah, and you learn a lot very quickly as well.
Yeah. Well, yeah, you do, definitely. But yeah, I was watching a few the other day, actually, and because I've been listening to your podcast for a while, and I liked you've had a lawyer on before, and they was talking about how private equity will, once they take control of a business, they will put things in place on earn-outs where they will mess with the EBITDA to pay less. And that's the first I heard of that. So then when I spoke to my cousin about it, because he's obviously had the exit, he's like, yeah, they tried that with me.
Oh, really?
His partner's a lawyer, so...
Right.
But, yeah, and so I think there's a lot of valuable stuff on there. And any of my friends, I always say, listen to your podcast, just because...
Oh, I appreciate that. Thank you. Yeah.
But there's nothing else, I don't think, out there. I think it's really good value, good, and, you're...
Well, it's real, isn't it?
Yeah.
It's real life experiences, and very different experiences in very different sectors.
And look how many people have done deals. Like you're interviewing people that's done deals. So it's, I think that's important, that you're listening to, real stories of what businesses.
Yes.
And you can feel the excitement from some people.
Yes, you can.
Which is cool. So yeah, it's good.
I appreciate it.
Yeah.
Thank you so much. I'll come see you out.
Sounds good.
Well, that was really good. We talked about some things I wasn't expecting to talk about, and it's so nice to have a conversation about buying a business with someone who's bought a business, bought several businesses, and knows what they're talking about. They can really add value to our listeners. So, one down. I've got a gap for the next hour or so before the next podcast guests arrive. So I've got Eva and I've got Ed coming for a meeting, and we're going to be talking about the process, because we're doing so many more videos, so many more podcasts than we used to, and it's getting a little bit confusing about getting it all out on the different social media platforms. So Ed and Eva, Tim, who's standing behind the camera at the moment, and myself are going to have a meeting to discuss exactly how we're going to make that work. So Ed, what do you think is the best process then?
Well, I think we've established pretty much that if you're going to be recording interviews with 4 contributors during the day,
at least 4.
At least, then we should be able to bank up podcasts for a whole month from one.
So maybe I could have a month off occasionally.
Well,
possibly. Is that allowed?
How do I get out? That way?
Yes. Hello.
Take it. Right.
Yes. Straight down.
Come in.
How are you?
I'm very well, thank you. How are you?
Good to see you.
You too.
Nice to see you again. Ed, have a good journey home.
Thank you very much. Take care.
How are things?
Very well, thank you. Very well, yeah. The usual
Good.
business world, isn't it? Ups ups and downs.
I know, I'm sure. I want to hear how many accountancy businesses you bought since last time I saw you.
Absolutely.
Would you like a cup of tea?
Tea would be amazing.
Okay, let's sort out a cup of tea for you. We'll end up with a podcast episode and a video, and then we'll break the video down into half a dozen smaller chunks to put on social media. So obviously, yeah, this will, I hope, ultimately lead back to business heading in your direction.
So, Joanne, so tell us a little bit of background here, because you bought 5 businesses. Now, that's pretty good going. Tell us about those 5 acquisitions, and tell us the interesting bits, the bits that everyone wants to hear, the things that went right, but also the things that didn't go so right.
Absolutely. So I started Bell's Accountants 13 years ago now, and at the time it was just me in my little car driving around collecting bags of receipts from gardeners, taxi drivers, and it got to the point where all the receipts and documents were falling out of my boot, my wardrobe, and all that sort of thing. And I realised that I did have a business here, needed to get myself an office, and I took on my first team member. So that I now understand was quite unusual in that it was a chartered accountant I took on, not an admin person. And I think that's because very early on I realised that I was supposed to be the business owner rather than the person doing the physical accounts. So I didn't just want someone to do my billing, I wanted someone to do the work so I could go out and win new work.
That's interesting then. So right from the very start, you recognised that if you were the doer in the business would always be stuck with how much you could do. But if you went out and won the work and other people did it, then the opportunity to expand was always going to be there.
Absolutely. And I think in previous firms where I'd worked on an employed basis, I always ended up in some sort of sales role where I was meeting prospects. And so it was relatively natural for me. But also with accountancy, it's relentless in terms of the deadline. So payroll, VAT, year end.
Exactly.
So you can't go on holiday, So if you want to be a sole practitioner.
So if you are the doer, you're actually you are tied to that business.
Absolutely. Yeah. And that, that wasn't very appealing for me. So quite quickly on, I wanted a team to sort of take care of the work and to grow it. But that said, acquisition was never on the table at that point. It was just a case of just grow organically, go out, win the new business, set up a great website, SEO. Good thing with accountancy is everyone needs an accountant. You've just got to be better than other accountants. So
and
it's
more visible,
easy to win
more
work.
visible.
Absolutely. Yeah. You've got to be found. So that was my focus at the time. And then the first acquisition really happened quite by accident. So it was just knowing someone who knew somebody. I think it was an uncle of someone's best friend or something or other, and the guy had tried to sell a couple of times to a big corporate, and he didn't like their morals. So he didn't like the fact that they wouldn't guarantee to look after his team and his clients in the way he had done. They wanted to move them out of location and all of that sort of thing. Whereas with me, I was very respectful of the fact that some of these people had been working for him since before I was born, actually, and it was important to him that they stayed on. But for me as well, it's realising in accountancy that those clients, it's just a list of names and addresses without the relationships they have with the staff members.
So looking after the staff actually is preserving the value in what you bought.
Absolutely.
And if you don't look after the staff, maybe you shouldn't have bought it in the first place.
That's it. Yeah, the retention piece. You've paid hundreds of thousands of pounds for a list of clients, but what you have is the relationship that they have with the team members who are left. So yeah, that was the challenge really, was making sure that was preserved. But when we sat down, myself and this guy, and sort of went through the pricing structure and how we did business, it was quite similar. So it was clear that I would be able to pretty easily sort of slot them in our group structure pretty without too much interruption and carry on from there.
Because you were kind of operating in a similar way already. Now tell me if I'm wrong, but was this the deal that you told me about with the terms that were
that's right,
incredible?
Jonathan. Yeah. So this to this day it remains the best deal I've ever done. Probably will always be.
It's the best deal I've ever heard of as well.
Yeah, it was a pretty good deal. I think it came down to trust.
Yes.
So and also the motivations of the seller. So the seller was not looking for a big lump sum. He was just looking for someone who was going to look after his practice. So when we started to talk about money and how much, because the business included a freehold property, so it's a freehold property and the list of clients, he asked if I would need to borrow money in order to do the deal, and I said, well, yes, absolutely. You know, I wouldn't have £500,000 in my back pocket. And he said at that point, would you mind if you effectively borrowed the money from me? So rather than going to the bank or a lender, you just pay me off over the next 20 years, and the rate were 2% above base. So up until very recently, that was a very attractive rate. Obviously now with the Bank of England rates going up at the moment.
So you've got a freehold property and the customer list, and obviously the profit generated from that customer list. You paid a consideration of 500,000 over a period of 20 years. How many years ago was that?
6.
6 years ago. So you got
14 years to go.
14 to go. And what sort of security did he ask for? Presumably he's got a charge over the property.
Correct. Yeah, that was all. So so charge over the property, but obviously that in fact did not cover the entirety of the amount of the consideration, because a proportion of it was to do with the business. So that was sort of just done on trust factor, but he knew that the bulk of it was secured against the building, so it wasn't as much of a risk.
And you could always refinance the building in order to accelerate his payments, perhaps for a discount. And then sort of create another sort of 20, 25-year term.
Absolutely.
With the mortgage.
I think he actually put conditions in the agreement that stopped me from paying it earlier, because it just wasn't what he wanted. He wants it. He wants to know that he's got a monthly income forever.
It just goes to show that you can't ever assume someone's motives, can you? And you know, people who've never bought a business before believe that the seller is all about wanting all the money on day one because they met someone once who wanted all the money on day one. And of course there are people who want that, but then there are people at the other end of the spectrum who are quite happy to accept it over a 20-year defer payment.
And I have met accountants that have said to me, thank God you're here. I've got these clients, and it's horrendous. You know, I'm 80 years old. I can't look after these clients anymore, but I feel a sense of responsibility to them. They've become friends of mine over a number of years. So thank God you're here. And I found someone I can trust to pass this business on to. You know, they're not even really considering the value within the business, because they've made their money over the years from doing what they're doing.
Absolutely. So they've been satisfied with what they've got, and now it's a case of passing the baton to the next owner, and looking after their staff, as you said, and receiving something for that. But it's not the be all and end all, is it?
No, absolutely. Yeah, it's not their main priority. The main priority is finding someone they trust to take the business forward, and actually being a part of something as well. A lot of them, it's a legacy piece, and becoming a part of something that's growing, and you know, has an ambition to become a large organisation, albeit a group of smaller practices within a larger organisation.
People believe in you. I think that's what it is. They look at you and they say, yeah, this is someone I want to back. Do you feel that? Or is that just? Yeah.
No, I do. I think there's another element of, I think I'm relatively unthreatening. I think to some extent, if you're confronted with maybe quite an aggressive business person, then maybe their wall would be up slightly more, and they think, well, I've got to watch myself here. Whereas with me, it's, it's just Jo, she's fine for it kind of thing, and she'll look after everyone, and there's a I'd like to think a calming aura around that it'll all be all right, and I think that actually comes with experience of acquisition as well. The more deals you've done, the process, they don't. So the fact that you're going in and saying, well, this is how it's going to work, this is how we will contact the customers, this is when they'll be told, this is how 2P works. So 2P is the piece of employment law regulation to obviously bring all of your staff on board with the buying company, and they don't know what any of that looks like. So if you can sort of walk someone through it and say, look, this is how it will happen, it's actually a big relief, because they think, oh, this person knows what they're doing.
When buying a business, you need a great lawyer on your team. So why not use mine? His name is John Andrews, and his details are on the screen.
What would you say to someone who's thinking about making the first deal, or thinking about getting more involved in acquiring a business? What would you say to them?
I would say that if you follow Jonathan's methods and Jonathan's strategy, from what I can see, you have absolutely nothing to lose. So why would you not do it? You know, we had a chat earlier, didn't we, Jonathan? I find it amusing to some extent when I listen to Jonathan's presentation that the way I've built my business, I've broken a lot of the rules Jonathan set down because it was my business in the first place. I was doing everything. Naturally, I'm the one dealing with the operations. I've used my own money. I've borrowed money. I've personal guaranteed it. I've done all of those things that, you know, had I known then what I know now, I wouldn't have done. And I've been lucky and fortunate, and I've not been punished for those decisions. I've got away with it, so to speak.
Sure.
To some extent, I've got away with it through my sacrifice, you know, because I've worked every hour God has sent to make sure it works, because my neck was on the line. But looking at it now from a different perspective, you know, using the money within the business itself to raise the funds, using other people's money, all of that sort of thing. Well, then it's not the risk that it would have been had you approached it in my way.
I guess if you have a, you know, it depends how much, you know, what's your, how do I put this? It really depends upon how many tools you've got available. So if you only got one tool, then that's the only tool you can use. So if the only thing you know about buying a business is you go and borrow money from the bank and you give that money to the seller and that's it, then that's what every single one of someone's deals will look like. But if you've got 20 different strategies, then you've got a different strategy for each situation, each occasion. And like you said about, you know, personal guarantees, putting your own money, all of these things. I think everyone does those things to some extent, and some it doesn't work. Some, you, as you say, get away with it. But if you don't have to do those things, if there's like a better way of doing things, then you've got an option that allows you to sleep better at night.
Absolutely, and you don't know what you don't know. So it's about those advisors around you. You know, when I've searched for advisors, be that solicitors or business coaches, and I want to find people who have done what I want to do, so that they can actually advise me. And that's been the case for a lot of the clients that have come on board with Bells. You know, they want to work with an accountant who's done mergers and acquisitions, who understands mergers and acquisitions, who's, you know, made them work. They don't want someone who's worked their way up within the practice as an employee, who actually can't advise them from a business perspective. So, you know, for people, you know, joining your mastermind classes or whatever, there's a lot of reassurance in that. They can just speak to someone who's been there and done it. Yeah. And the numbers say everything you need. You know, once you take the emotion out, which is what we were saying, take that out and just make sure the numbers are absolutely rock solid, you can't go wrong, really. Yeah.
Fantastic. Joe, what a great discussion. What a fantastic conversation. And we'll put a link to your website in the description. So people can get in touch with you if they need some accountancy support. But it's always good to hear from someone else's experiences. You know, the rough experiences as well as the good experiences. But what's next on the horizon for you? What's the next part of the plan?
So it's my intention to continue growing the practice aggressively, sort of organically and via acquisition, hopefully, but maybe with a slightly different methodology. Having met you, Jonathan, I might approach it in a slightly different way going forward. But I'd really like to make it into the top 100. I'd like to be the first sole female director to make it into top 100 accountancy practices in the UK.
That is a fantastic thing to aim for. And I know someone who might want to be selling their accountancy practice, so I'll put the two of you in touch. Joe,
fantastic.
You've been great. Thank you very much indeed.
Thank you for having me, Jonathan.
That was really good.
Was that okay?
Yeah, that was great. Thank you so much. And really interesting. I know you told me that evening, sort of, you know, that story in a different way. But great to hear it again. And yeah, really, really good.
For me, it was one of those real, like, drap moments, you know, sitting watching your presentation. I thought, oh my God, if I thought of it like that beforehand.
But and what an amazing deal that first deal was as well. I mean, who does 20 years deferred? I mean, that's just ridiculous.
But what you said to me, you said to me, the key to a negotiation is the ability to walk away.
Yeah.
And what I've realised, well, there's two things going on at the moment why that's relevant. But in the first deal, I had no interest in doing an acquisition. I hadn't looked for him. He wanted to sell to. He was looking for someone to sell to. So I could absolutely walk away. I was like, shall I do this? Shall I not? Don't really care. Quite happy. My business is going well. Thank you very much. Don't need to do it.
There you go.
Pleasure to see you.
I will see you again soon. I'll let you know when it goes out, okay?